Hello everyone, welcome back to another video. If you're new to this channel, my name is Farhan and I help accounting students like you ace their exams. Today we have got a practice question which requires us to do the correct debit and credit entries. So basically we are preparing the journal entries, alright? So you can see we have got 5 transactions for the month of May 2022 for a business known as Santo Computing, which buys and sells computers, alright? The following transactions took place in the month of May 2022, and we are required to complete the table by stating which accounts are to be debited and which accounts are to be credited. So we're not going to complete the table, but we're just going to write them out in simple sentences and mention whatever accounts are debited and whatever accounts are credited on the respective dates for each of these transactions. All right. So let's start with the first one on May 1, 2022. Business pays rent of $2,000 by check. So the business is paying rent because an expense has been incurred, right? So when an expense is incurred in the business, we always debit it. So always remember, by default, expenses are always debited, which means when they increase, we debit it. So we will debit the rent expense account by $2,000 on the 1st of May 2022. And because we have paid for this rent by check, it means we have used our funds available in the cash at bank account and our assets therefore would have decreased. We know when assets increase, we debit them, but now that they have decreased, we have to credit them. So we will credit the cash at bank account by $2,000, all right? So what we're doing in this first transaction is to increase an expense and simultaneously decrease an asset, all right? So now let's go to the next transaction on the 4th of May 2022. Business purchased goods on credit at a list price of $4,500 less 10% trade discount. All right. So on the 4th of May 2022, we first want to calculate the amount for the trade discount. So trade discount is 10%, which is applied on the list price as a whole. All right. So basically what this transaction is saying, whatever list price is mentioned for this item, you can take a 10% cut, all right? So 10% of $4,500 is $450. And after discount, the cost would be $4,500 minus $450, which is $4,050. So this is what Santo's computing business has to pay to buy those goods, all right? So that means when Santo buys these new goods, assets are increasing in the business for Santo, which means inventory will go up. Inventory is an asset, and when assets go up, we debit them. So we would debit the inventory account by $4,050 in the books of Santo Computing, and simultaneously, we will credit the trade payable account, which is the supplier account, because the transaction clearly mentions that these items were bought by Santo Computing business on credit. So obviously a liability is taking place. So we credit the trade payables account by $4,050, okay? So what's happening in this transaction is that an asset is increasing and also simultaneously liabilities are increasing. Now let's move to the next transaction on the 5th of May 2022. Business issued a check of $7,200 to Sam, our credit supplier. So this means Sam, from whom the business purchased goods on credit in the past, is now being paid off. So in the past, when we would have bought goods on credit from Sam, what would we have done? So in the past, we would have debited the account for inventory because our inventories would have increased once we have bought some items from Sam. And because we would have bought these on credit, that would give rise to a new account, which is a liability account, and we would be crediting the trade payable account of Sam by $7,200. So this is what we would have done initially when we bought the goods on credit in the past. Now that on the 5th of May 2022, we are paying Sam off, it means our liabilities are decreasing in value. So we have to debit the liability account, which we originally had, which is the account for trade payables Sam, to reflect that we have paid them off. So we debit the trade payable account of Sam by 7,200. And because we have used funds available in the bank account, which the transaction clearly mentions check, it means our funds available in the bank account will decrease, which means assets are decreasing. And when assets decrease, we credit them. So we will credit the cash at bank account by $7,200, okay? All right. So now let's move to the fourth transaction on May 12, 2022. The business returned $1,500 amount of goods to credit supplier. Okay. So again, we need to understand what happened in the past, all right, before we can understand what to do on the 12th of May. So in the past, the business would have bought goods on credit, all right? And when the goods would have been bought on credit, we would credit the liability account for trade payable by $1,500. Agree? And also, when the goods would have been bought in the past, the assets in the business will increase, which means we would have debited the account for inventory, all right? Today, on the 12th of May, the business is returning $1,500 worth of inventory. So what does that mean? That means the liability will now decrease by $1,500, which we originally had in our books. So now when it's decreasing, we would debit the trade payable account by $1,500, which is reflecting the reduction. And simultaneously, our assets will decrease because we would have returned our inventories to our supplier. So when assets decrease, we would credit it. So we credit the inventory account by $1,500, all right? So you got the different dates and how we enter the transactions in our books based on the events that have been taking place, all right? Now let's go to the last transaction, so which is the 15th of May. Business sold computers worth $8,800 in credit. So let's stop at the first sentence there. So whenever there is any kind of sales that the business has made, what happens is that we credit the revenue account, which is the sales revenue account. Whenever we have revenues in the business, we always credit that. So we credit the sales revenue account by $8,800. And because we had sold these goods on credit, we have an asset coming into effect, which is the current asset account for trade receivable, obviously because these guys now owe us money because of the credit sale that we have done with them, all right? So when assets increase, we debit them. So we debit the trade receivable account, all right, by $8,800, which means assets are increasing and revenues are increasing. Now let's read the second sentence in that transaction. The cost of the computers sold was $4,200. So $4,200 is the amount Santo paid to bring this inventory into the business originally and in the past. So in the past, Santo went to his supplier and he was like, hey, I'll give you $4,200 for this batch of inventory. And Santo bought those inventory for $4,200, which today he's selling to his customers at a markup and at a profit for an amount of $8,800. Obviously, that's how businesses are conducted, to make money in this case. So that inventory which Santo originally bought in the business would have been recorded as an asset and he would have debited that by $4,200. But now that the inventory has been sold to a customer, it no longer remains in the books. Therefore, assets are going down in value, and to reflect that, we would credit the inventory account by $4,200, all right? Simultaneously, an expense is incurred for the business because obviously that is what happens when you generate revenue, you incur expenses along the way. And that expense account is the cost of goods sold account. And because it is an expense, we debit it. And we debit it by the amount of $4,200, which is the actual cost of the business of initially acquiring this inventory from the supplier in the past before selling it today on May 15 at a profit to a customer, okay? All right, so an expense is incurred, so we debit the cost of goods sold account by $4,200. Simultaneously, an asset is going down, so therefore we credit the inventory account by $4,200. All right, so these are the 4 lines of entries that are required on the 15th of May for you to get full marks, okay? All right, so I believe you found value in this content. Make sure to drop a like and subscribe to this channel and check out the other videos, and I'll see you in the next lesson.